Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken. Our model portfolio is up 2.35% year to date. Our stock market strength color signal is green. And here is where the portfolio currently stands. We compare ourselves against the S&P 500 buy and hold investor. Their portfolio is up 9.66% year to date. So they are doing really, really well. Here are some past returns for the model portfolio. Last week, the S&P 500 gained 2.23%. So a nice, good week for the S&P 500. You can see this run that has been sustained in the S&P 500 buy and hold investor has just been really, really well since October of 2023, bottoming and just been on a tear ever since. We have not seen the correction yet. There were no trades last week in the model portfolio. Here are the trades that we've made so far in 2024. If you want to go back and see all the trades going back 3 years, you can head over to this link. There will be a link in the description down below. Go ahead and hit that subscribe button, ring that bell, and smash that like button down. Thank you. Here is the equity curve for the model portfolio 2024 year to date. Here is the equity curve for the buy and hold investor, practically a straight line up for 2024 year to date. And here is the two equity curves combined because we want to compare our model portfolio against the benchmark. Here is the Fed Chair, Jerome Powell. And on the last week, we had March 20th announcement. The Fed holds the rates steady, made no changes. And the next announcement will be May 1st. This is looking at things from the presidential election cycle theory, which states, depending upon the year of the election, you have historical rates of return for the S&P 500 and for the NASDAQ 100. President Biden is in the fourth year of his term. Historically, that average is 6.7%. The buy and hold investor is up 9.66%, superseding the average of the fourth year term for a presidential election cycle theory. Strong market. All right, now we are looking at things from the bond market outlook. The bond market says stay out of the stock market because we have an inverted yield curve and we have rising interest rates. So that's where we stand with that subject. Warren Buffett, CNN Business Fear and Greed Index. We are currently at number 72, greed, approaching extreme greed. Now we're looking at a seasonality outlook. We are in the month of March. Going back 20 years, in the month of March, 75% probability that we're going to close the month higher than when we opened. We are currently, for the month of March, up 2.9%, giving plenty of room to close this month higher currently than when we opened the month. Look at all these green candles, very strong, since November of 2023. All right, now we're looking at a 20-year monthly chart S&P 500 long-term bull market up as long as we maintain these levels right here, and we are doing that right now. Strength is in this market. You can see that in the MACD. You can see it everywhere. This particular angle of ascent is unsustainable. This will correct back down at some point, definitely in 2024. And here we are looking at a 5-year weekly candlestick chart of the S&P 500. You can see that we are in this trading range, and as long as we are within this trading range, we need to be long this market. Here we are looking at the same chart, but now it's a daily candlestick chart going back 6 months. This is the angle, this is the trading range that we're in right now. And last week we did come down and start kissing this lower support line, but we bounced up and we're above it. So I'm thinking about taking on a long call right now because right now I don't see weakness in the market. I'll show you that later on in the presentation. Okay, now we're looking at a risk on, risk off indicator. It's a ratio chart, NASDAQ 100 against the S&P 500. And we were in this trading range here and here. When we broke down last week, I was like, oh, things are looking like they can go potentially south. And they did, but on the S&P 500, not by much. We found support right here at this level here, where we found support 2 times recently in the past. And we bounced off of it, and now we are heading north. Well, heading north, and look at your MACD, which has come down to the level of value and is getting ready to cross up above its signal line. Slow stochastics is already above its signal line. This is telling me that risk on is going to be with us for at least 2 or more weeks, or at least until we hit the bottom of this, and then we'll have to see what it does. This is another reason why I'm thinking about taking on a long call right now. It looks like we're going to be going, the market's going to be going positive at least for 2 more weeks. Now we're looking at another ratio chart from the equally weighted S&P 500 symbol RSP to the normal cap weighted S&P 500 symbol SPY. That's the chart that's in black and red. Now, the S&P 500 is in dark blue, equal weight is in lime green. And a couple of times in the past, we've fallen off of a cliff on the S&P 500 when the ratio chart drops like it did here, here, and here. But the market did not sustain any significant correction since this. There was a little bit of a correction here, but that's basically nothing. So I'm looking for a little bit more of a correction, but right now it doesn't look like it's going to give it to us. But I'm monitoring this chart to see how that plays out. Now we're looking at the VIX Volatility Fear Index, and guess what we have done? Over the last 2 trading days, we have dropped below this trading range, telling me that the market wants to stay in this ultra low range. Well, guess what happens when the VIX stays in the ultra low range? The S&P 500 advances. The dark blue here is the S&P 500. There is a support line right here. As long as we are on the top side of this trend line, and look at that angle of this trend line, by the way. As long as we are on the top side of this trend line, I'm going to take on a long call. All right, I would like it if it came back down, kissed it like it did here, and then went up, because then I would be immediately profitable. But I don't know if I'm going to be that lucky for that to happen. But I do want to watch this. But with the VIX being so low, the fear is not in the market. It looks like I can take on some more leverage at this time. That's why I'm talking about taking on one call. Now we are looking at the Thinkorswim trading platform, and in here we have a 5-year weekly chart with standard deviations, +2, -2 in gold, +1, -1 in pink, regression line in dashed green. The S&P 500 is below the +1, so it still has room to advance before tagging that +1. Over here, it went above the +1. It went to about 1.3 before it started to flatten and come down. Here we are still in an advancing mode. Now we're looking at a 1-year candlestick chart with the standard deviations, and we are just hovering below at 0.85, below the +1. So unknown, exactly what it's going to do here, but if it continues to stay above this regression line, that keeps pushing the +2 and +1 and +2 standard deviation lines up, and up each week, or each day rather, and that will allow this market to do what it's been doing, drift up. Now we're looking at the same chart, but only going back 6 months, daily chart. This would be a strong buy zone, and this would be a strong sell zone, and we're in the middle. Now we are looking at a chart that I developed just to determine the health of the market, to come up with some color strength signals. Now, up here is asset classes. Down here is the 11 S&P 500 sectors broken down into each sector. And I come up with a simple formula here just to try to populate some information about the strength of each one of these asset classes and each one of these sectors. And then I come down and I derive at a ratio, and then I compare that against last week. This is all strong. So the asset classes increased by only 2 percentage points since last week, and the 11 sectors dropped from 92 to 89. But these numbers are just very, very strong numbers as a whole. Now we are looking at a 1-year bond chart. Look what happened here in the 1-year bond yields. I put in a resistance line here. We tagged it perfectly and came down. In judging by the look of the MACD and the slow stow, it looks like this green line is going to get taken out, and the yields are going to come down below here. Well, when the rates hang out in this area, the S&P 500 advances. Another good reason to take on some leverage right now. That is my presentation. I gave you a lot of information. Now comes our critical thinking. What are you going to do with that information? Well, as of March 23rd, 2024, the market summation, according to me, your friendly host Ken, with SPY Trader Now, the market strength is strong. We all know that. I am wanting to put on one long call. Why only one if it's so strong? Why? Because you never know when this market's going to go south and go against you. And I'm going to pyramid into my positions anyway. So if I took on one and I was still holding it, I may take on another one after this one is profitable. But for right now, I don't have a long call because I exited out of my last long call. And I am considering putting on another one to make some more cash in this market. And I don't see weakness over the next 2 or more weeks. This is the exact call that I'm thinking about taking on, and that's going to cost me $1,600. I have $5,987 in cash in my model portfolio. So I got the money just sitting there. So this is what I'm going to do. I'm going to see what the market does on Monday, but if everything goes well on Monday, I'll take this call. And that is it. I hope you've got some valuable information out of this video. If you have not done so already, hit that subscribe button, ring that bell, and smash that like button down for me right now. I thank you, and I wish you good trading.